Hey guys, my name is Sandy Giff. I'm a licensed realtor here in the Central Florida area. Today I want to do a video on how is the interest rate in 2024 affecting home buying or affecting home buyers. How is that going on? What's going on? The market is kind of slow, we know this. Interest rate is definitely a factor in people buying homes. I don't know if the interest rate will ever get back to what it was in 2020 when it was 2 to 3%. 4% was kind of high back then, remember that? So now the market has changed because interest rates has climbed up. It went down a little bit a few weeks ago. They're saying it might go down a little more before the end of the year. This definitely is going to affect buying power because the lower the interest rate, the more home you could buy. The higher the interest rate, the less home you could buy. And this is all based upon the monthly payment, right? Of course, if you're paying cash, it doesn't really matter because you're paying cash. But if you are financing and you're putting a little down, like under 20%, the interest rate will definitely be a factor. And even if you're putting your down payment, the interest rate is still going to affect you because monthly payment is going to be based on your credit report. So all of the expenses that you have in your credit report, they're going to put that together, all those monthly payments, and based upon your income, it's going to weigh against your income if you're a W-2 worker, and that's going to determine your payment. If you're self-employed, it works a little bit different, but at the same time, then if you're self-employed, you'd need to put more money down. And again, interest rate would be a factor because the least amount of money you put down, the higher your monthly payment will be. So how is this really affecting buyers? It's really affecting buyers, I would say, especially first-time home buyers. Or even buyers who are selling their home to buy another home. It's going to affect them because it depends upon how much equity will be in the home that you're selling to purchase another home. Let's dig into this a little bit. In this market, if you're a buyer and you have to buy, people are always going to have to buy and sell real estate. I mean, the market cannot come to a standstill, right? People need somewhere to live. So if you're a buyer in this market and you're looking to buy, my first thing would be, what is your price point? And based upon your price point, are there any new construction in the area that you could purchase in that price point? For an example, let's say you're qualified to purchase a home for $400,000. And there's new construction in the area you're looking for $400,000 or less, then my first pick would be builders. The reason why one of my first pick would be builders is because they tend to offer incentives towards paying on your closing costs and paying on your interest rate. I just did a video on this, so you got to be careful on what builder you're using, because sometimes some builders use this as a switch and bait, unfortunately, right? Sometimes they use it as a switch and bait. For example, I experienced a builder that don't like working with real estate agents, and I saw why after I experienced this, that was offering to pay up to 6% of the buyer's closing costs. But when we got the worksheet and got down to the numbers, what the builder was really doing is buying down the interest rate down to 4.99 for the buyer, but the buyer was really going to pay their own closing costs. And when a builder tells a buyer, we're going to pay it on your closing cost, we're going to pay your closing costs, the buyer is going to think, okay, well, I don't have to come up with a closing cost because the builder is going to pay for it. The buyer is not thinking that he's only paying down the interest rate or they're only paying down the interest rate. So you got to be very specific on what builder you're using. Now, there's some great builders out there that's giving great incentives where they will pay your closing costs and also pay your interest rate down, or they'll give you, like, say, $30,000 that you could use towards both. So you could use it towards paying on your interest rate and also paying your closing costs. It's very important for you to know the difference. So it's very important for you to ask the builder, if you are going to be paying my closing costs, what does that look like on paper? Because I just don't want to hear, don't just go by the builder's going to pay your closing costs. Okay, how much closing costs are they paying and exactly what are they paying? Now, when a builder is going to be paying your closing costs, more than likely they're not going to be paying your prepaids. What are prepaids? Prepaids are going to be the taxes on the property. For new construction, it may not be a lot. It depends upon the lender. Some lender will wait for the property to hit the taxes, because remember, when you buy a new construction home, the tax department sees it as vacant land because there's nothing on there yet. So when they build a home on the property, it takes like a year or so before the actual taxes kick in. Some lender will go by the estimated taxes and start to escrow taxes from day one. Some lender won't do that, so it depends upon the lender you're working with and what your dynamics are. But for most W-2 lending, if you're doing a W-2, more than likely, the lender is going to start to escrow for taxes. And they're going to want you to pay 1 year insurance up front. The reason for this is if you're escrowing your taxes and your insurance, then the bank needs to make sure they have the money to pay it when it's due. So let's say, for an example, you're buying a property in June and taxes is due in November. They don't have 12 months to collect all that, right? So they have to take certain amount up front. So that's what your prepaids are. Stuff you have to pay up front, or stuff you got to pay to start your escrow account with the mortgage bank or with your lender. Okay, so that's prepaid. So more than likely, you're going to have to pay your own prepaid. So you want to be specific into what exactly the builder is paying for you. If the builder is offering you certain upgrades, that they're giving you a certain amount of money towards upgrades, you need to know if this money includes them giving you the money for the closing costs. So if they said, we're going to give you $20,000 towards the closing costs, so we're going to help you with your upgrades, what does that look like? Am I taking some of the $20,000 from what you're giving me to do the upgrades, then use the rest for my closing costs? And we all know that $20,000 is not a lot of money for upgrades, right? Because we could go crazy in those design centers. Now, some builders will do an all-inclusive. Like they'll put everything together. They'll be like, included is your quartz cabinet, quartz countertops, 42-inch cabinets, all this stuff is included, and this is the price. There's no upgrades. There's nothing for you to add on to. When you close, you could do whatever you want to do with the property. Or some builders will say, we're going to include all this stuff, but if you want to do the flooring, because we're going to give you carpet on the non-wet areas, so if you want to do hard floors in the not wet areas, that's going to be an upgrade. So you need to find out what those upgrades are. Now, that was the building side. Let's talk about resale. You're going to buy a home from a seller in this market with high interest rate. A lot of sellers are also offering incentives, right? A lot of sellers will say, we'll give you $10,000 towards your closing costs. We'll give you $10,000 towards buying on your interest rate. Those are the sellers you want to look for. Or if the property is priced correctly, right? So the property got to be priced correctly, meaning it's market value, but it's not overpriced, because then you'll be paying more money. And the next thing you got to look at also in resale is, does the property need any work? No, I really don't mean any work. I don't mean that they have brown cabinets and you prefer white, or they have granite and you want quartz, right? Because that's not really an upgrade. That's a you preference. Does the property need actual work for you to move into it? Because that is going to determine where your price line is, and that's going to determine your financing. Now, on a quick note, there is a loan called a FHA 203K loan, which gives you the money not only to purchase the property, but also to fix it. So if you're buying a property that needed work, the FHA 203K program will give you the money based upon what your qualifications are to purchase the property and to fix and to repair the home. The repairs are going to cover like roofs, air conditioning, hot water tank, electrical, plumbing, stuff that's going to make the home livable. Not stuff that you want because you don't like granite, you like quartz. They're not going to do that. So they're going to actually give the money to actually fix the property, and that's the FHA 203K. Once the repairs are less than $30,000, it works as a regular loan. But if the repairs are over $30K, then it becomes a 203KB program, and it becomes a lengthier process to close. And a lot of lenders don't like working with them because it's a lot of paperwork. So there you go. So buying a home in 2024 with a high interest rate, as I said before, recapping, you may want to check out builders to see what they're actually offering, but make sure you understand the fine print. Make sure if they're offering $30,000 towards your closing costs, that is actually going towards your closing costs, and it's not going to go towards interest rate buy down or upgrades. And if it is going towards that, make sure you know that up front. Make sure that is detailed out to you up front. Very important. If you're going to go to resale, you want to find a motivated seller, or you want to look for off-market properties. We specialize in a lot of off-market properties. These are properties that are available for sale that nobody else knows about. It's not online, it's not on Zillow, on Realtor.com, it's nowhere on the internet. We just know that that particular seller is thinking of selling, and we unite those sellers with our buyers. We actually have a platform that our buyers will sign up on, and once we know a seller is looking to sell their property, we will put those properties on that particular platform so that buyers could take a look at it, and they have a list of off-market properties they could look at. That may be also a way to go, because that way you're not competing with other people. And some sellers just don't want their home on the internet. They don't want the properties online. They don't want all these different showings. They don't want the open house. They just don't want that. They just want to sell the property. They just want to find a buyer to sell their property to. We work with a lot of those sellers, so off-market properties may be a way to go, because then you could negotiate, okay, a lot of those sales will be more negotiable than the ones online, because online you're competing with other buyers. So you may, even if you're selling your home to buy another home, you may want to look at off-market properties. How do we find off-market properties? A lot of time we'll ask our buyers, hey, what area do you want to live in? What location are you interested in? And once they give us a location and the development they really love, we will then ask the homeowners in that particular area if they're thinking of selling. A lot of times they are. They'll say things like, yeah, we're going to sell, but we're waiting for school to end. Or yeah, we're going to sell, but we don't want to sell until the springtime, or whatever it is they tell us. Then we find, if we have a buyer that corresponds to what they're telling us, then there we go to getting our off-market property. So it is still a good time to buy in 2024, even though interest rates are high. You're just going to have to buy a little bit more savvy. We have to find builders that works well with us and will pay them some more interest rate, as well as real sale homeowners who are looking to sell. We also could find homes that are in repair, that is in need of repair, but the homeowner don't want to do repairs, because then those homeowners will become more negotiable. Maybe there's properties that somebody inherited from, somebody died and they inherited it, and they really don't have that much interest in the property, they just want to get rid of it, so you might be able to find a deal. So in this market, you could still find a deal, and you could still pay down the interest rate, so that way you don't have a high interest rate going in. Again, my name is Sandy. I hope this helped. You can always call or text me. My number should be somewhere above here or somewhere below the video. If you have any questions at all, we do complimentary Zoom calls. So if you have any questions at all, or you want to go over some stuff with us, feel free to reach out. Thank you so much for listening, and remember to follow. I keep forgetting to say this. Remember to subscribe to the channel, because we're always putting out more and more videos on various different topics. And you could also let us know what topic you would be interested in hearing. Okay? See you in the next video.